This interview is being disseminated by Paramount Gold. I'm your host, John Feneck, and this is the Feneck Commodities Report on investorTV. With me today is my podcast partner, Don Durrett, founder of StockTA.com. Don, how are you?
Great. Looking forward to talking to Rachel today.
Yeah, me too. We've both known Rachel for a number of years. You and I were having dinner with her in Las Vegas 3 years ago, almost to the day, when the stock was in the 25-cent range. And we were both sitting at that dinner, I remember, and saying, why does the market get this? Like, you've got this huge project just sitting there in Nevada, and Oregon seems to be moving forward. And now, congratulations to Rachel. January 29th, we saw some great news, and I'm sure she's going to talk about that today. So before we get started on PZG and Paramount, I just wanted to mention a couple of stocks, Don, and these are ones that we have interviewed before. So just to get your thoughts for the audience, because some stocks, don't have a lot of current news, right? And so a lot of people use our show for updates and such. So Triumph Gold is a great example of that. That one is TIGCF in the States, TIG in Canada. We interviewed John last year. They haven't had much news at all. But being that it's a new calendar year, I know they're going to come out with some type of corporate update soon, and just let people know what their game plan is, because John definitely has a game plan. What's really interesting to me about that stock is that when we interviewed him, he had basically just a gold project in Yukon, which is around 1.8, 1.9 million ounces of gold, which in itself is very interesting. But since then, he's acquired a silver project in Utah, which was strategic on his part for very little money last summer. And then he's since found a lot of tungsten and antimony on the project in Canada, the gold project. And with tungsten and antimony prices just flying since last summer, I mean, it's really adding value to the story. Another one that we're going to have on again sometime soon is Denarius Metals. That one's DNRSF in the States, DMET in Canada. I think they have a lot going on this year and are not being properly valued based on what they are as a producer. And they're producing gold and silver stock. Like, as you pointed out before, Don, and you can comment on this, but there's less than 200 of these globally, right? Like they're not a dime a dozen. And they're already at a pretty advanced stage. Another one would be Nevada King Gold, which is NKGFF in the States and NKG in Canada. This one we interviewed at 9.5 cents. I went back and looked, and it rocketed to 19 cents in a few weeks. Now it's at 13 cents. So it's retraced a lot of that gain, but nothing's changed. I mean, they have a 1.1 million ounce deposit of high grade gold in Nevada. They've outlined what I consider to be a pretty good plan here for the next number of months. And John, when we interviewed him, said that, hey, we don't need cash right now. We're not going to go out there and dilute shareholders into the ground. So they have a good share structure that, is heavily owned by insiders and strategics. And lastly, I'll just mention a silver name, which is Silver 47. That one's AAGAF in the States and AGA in Canada. I introduced that one to you, Don, at around 59 cents at Beaver Creek. I don't know if you got the opportunity to sit down with us, because you and I had like 35 meetings each. But it ran up to $1.01. I looked at the chart today, and I thought it was around a buck. It's at 57 cents now, so it's below where I introduced it to you 6 months ago. Yet silver is up ridiculously, which makes no sense, right? Like, silver's shown you its hand, and here's a silver stock with 250 million ounces of silver equivalent in the U.S. It's getting bonkers. So I'll turn it over to you.
Yeah, I've been saying the place to be is in quality producers, quality developers, because they are very elastic to the gold and silver price. And those are the ones that I really want to own. But I do own a few explorers. I do own Triumph. I think it's a very good optionality play. And Silver 47, I think that's a good optionality play. I mean, they have three projects. As soon as Silver 47 formed, I bought it because I like the Red Mountain, and then they acquired Suma. I was really happy with that. So right. I'm not completely anti-exploration, so I do own Silver 47. I actually think Nevada King is a nice drill story as well. Denarius, I want to add to Denarius. I keep waiting for their next news release, and see what they're going to do, yep. Because the closer they get to production this year, they're building a mill this year. So I want the next corporate update. I want to see how close they are to building that mill. The closer they get to building that mill, the more excited I get. So I wanted to mention, since talking a little bit about optionality with Triumph, I looked at Kinross last night. I analyzed Kinross, and they have their current run rate at $4,900 gold is $5 billion in cash, free cash flow run rate. They have $1.7 billion in cash and only $750 million in debt. So by the end of this year, they should have $3 billion on their balance sheet in cash and no debt. Now, I was thinking about the Fort Knox mine. So the Fort Knox mine is a really big mill, but they're going to start mining underground in 2028. They're only going to mine about 150, 180,000 ounces, which is about half what that mill loads. And they're going to be sitting on all this cash. And right next door to them is Free Gold Ventures. As their balance sheet gets bigger and bigger and bigger, the CapEx to build that Free Gold Ventures project gets tinier and tinier and tinier. It's like a little speck on their balance sheet, and they can fill up the mill. I mean, to me, it's a total no-brainer. I got to believe they're going to make a call to Free Gold Ventures at a certain point, either probably not in 26, but in 27, next year in 27. If they're sitting on, 4 or 5 billion in cash on their balance sheet, the CapEx on that thing is going to be under $1 billion. So and it's, it's right next door to them. It's easy peasy. So I just wanted to bring that up. I'll turn it over to you instead of keep talking.
No, that's great. And a lot of these names that we just discussed, with the exception of Denarius, all have U.S. presence. And the story we're going to talk about today, Paramount Gold, is in the U.S. and in two great states, Oregon and Nevada. So why don't we just leave it there, Don, and bring Rachel on so she can talk to us a little bit about the recent news. And again, this is Paramount Gold. Symbol is PZG.
Well, one quick one before I bring her on. I always liked Paramount Gold Nevada because I saw it as, a long-term, fantastic leverage play, because Grassy Mountain, you get Grassy Mountain, which looks really, really solid, and then you get the Sleeper Project. So it's like you buy these companies that have this future optionality, this future leverage, and the gold and silver prices go up and you go up. When I analyzed this company, I looked at my data, it was March 3rd of last year, so about 1 year ago, had a market cap of $25 million fully diluted. Nobody wanted to own it. Today, it's almost at $200 million, which has been a six-bagger in 1 year. Now, there are a lot of plays out there that are very similar stories to this that are like, nobody wants to own them. They're unbelievably cheap. I can name lots of them, but two I want to mention though is Guanajuato and Santa Cruz Silver, who have totally been obliterated here. Everybody thinks that silver's going to zero, but if silver's going higher, I mean, Guanajuato's down like 50%. I think Santa Cruz is down like 50% off of their highs here. Like in the last 2 weeks, they've dropped 50%. But they're highly leveraged to the silver price. So it's kind of, they're somewhat similar to this. I mean, you're betting on the future, if you will. So
yeah.
And so I just wanted to mention those two stocks have been completely obliterated. If you're a fan of the silver price, good entries. So now we can bring her on.
Well, okay. Thanks for that. And I do want to just piggyback on your comments on PZG, because you and I interviewed Rachel last year around that valuation. I went back and looked. It was at 35 cents US, and the stock today closed somewhere around 215 a share US. So again, this is why we encourage investors to sign up for Don's website, goldstockdata.com, or go to my website, fenneckconsulting.com, and look at the services we provide. I mean, we're doing stuff that not a lot of duos in the mining space are doing. We're very shareholder focused, and we're trying to get you guys into stocks early. Like the name of the game is buy low, sell high, right? Like this is not chase everything into oblivion, like you just pointed out with Santa Cruz. I mean, if you look at Santa Cruz's stock, I'm just sorry, but like I wrote against Santa Cruz a few weeks ago, just saying this thing's gotten up like ridiculously high, like versus the peer group, right? And I don't know anything about the CEO or the project, to be quite frank, but I'm just saying versus other silver stocks that I was buying that were super cheap. I'm like, why would you want to chase this thing that's up hundreds of percent in 6 months? It's like then you have a 50% decline, like you just pointed out. It's like then you never go back to the sector. You get your hand slapped really, really bad, and then you basically say, well, hey, I just can't handle this volatility. No, you're buying stuff that's going up too fast, and you don't understand what you're buying, right? Like, so you have to really do the homework. And Don and I do the homework. We go to conferences. We spend a lot of hours on weekends doing this stuff. It is not easy. So, at least sign up for our services and give us some love that way, because this is how we build this is our job, right, Don? I mean, like, this is what you and I do for a living. I mean, we both have kind of like tripled or quadrupled our following, I'd say, in the last 12 months because we're at it every single day.
Yeah, I basically became a full-time investor in 2004. I'm just bringing people along for the ride. I mean, I just feel like if I'm going to do it, I might as well just share it. So I wrote a book and created a website. And so it's really just me bringing people along for the ride.
Yeah, I think that's great. Okay, well, thanks for the comments, Don. Let's bring on Rachel Goldman, who is CEO of Paramount Gold Nevada. PZG is the ticker. Hey, Rachel.
Hi, John. Hi, Don.
Welcome back, Rachel. We're looking forward to it.
Oh, so am I. It's great to be here with you. I was reflecting also on the last time the three of us all sat down together, and it was back in August.
Yes.
Yeah, so we had done one, I think, earlier in the year, and then again in August. And the growth in the stock has been outstanding since both of those interviews. So congratulations on all the accomplishments that you and Paramount have achieved.
Well, thank you. And I'm particularly proud of the fact that it is backstopped by legitimate development. And this isn't just a reflection of this, the stock reflecting the move in the gold price, but actually things that we're delivering on as well to de-risk the story moving forward.
Yeah. So, Rachel, why don't you give us maybe a 7 to 8 minute overview of what's happening these days at PZG, and then we'll ask you some questions.
Terrific. Yeah. So when we look back to the last time we were all together, it was in August, and it was not long after the Bureau of Land Management had released our draft environmental impact statement, and the stock had basically done nothing. And, I think there's a little bit of an adjustment to believing when things actually come to fruition, believing good news in the sector. I think we're a sector that's been pretty conditioned to be afraid of what comes next. And investors, like you were mentioning earlier, can be a little bit quick to give up on stories or whatnot. And maybe this is an example of where it pays to be early and it pays to hang on. So I remember we'd shared kind of joint disappointment that there hadn't been much of a reaction, considering the historic nature of this project receiving this draft environmental impact statement. And so, fast forward from there, and thanks to the two of you for bringing attention to that milestone, because we did start to see a reaction in the stock price. And I think the sector too was getting ready to go. So maybe will be another positive indicator here for us moving forward. But so what happened since then, and the news that you're alluding to, is post the draft, there was a public comment period, there was a public hearing. All that got buttoned up basically at the end of last year. And if you recall, there'd been a federal government shutdown, which interestingly didn't affect any of the work going on our EIS. Our local Oregon BLM team worked through the government shutdown, which I thought was so impressive. But then what happens is when the government reopens, and there's suddenly a lot of paperwork that needs to move around different departments, different, solicitors, legislators, different, levels of the kind of administrative bureaucracy, if you will. And that was why they ended up saying, having our final EIS and record, more importantly, the record of decision scheduled for January instead of December. I mean, you're coming up against the holidays and all those things. So there was nothing untoward there. It was really just more of a an adjustment to reopening government after that kind of shutdown. And so January 29th, we received the positive record of decision from the Bureau of Land Management. It is really a historic event because this wasn't just the first record of decision for a chemical processing mine in the state of Oregon. Actually, Oregon's never had a mine that was permitted under current permitting regulations, if you will. So really historic from that standpoint, but it also turned out to be the first EIS that was delivered under what they call the new NEPA. So if you recall, back when we issued our draft, it coincided with the release of new NEPA regulations as well. So we were suddenly on the forefront of all of this really dramatic change in the industry. And, I have to again give a nod to, this administration has really driven a lot of positive change on the permitting in the US. And, it's amazing how quickly some of these agencies can shift, once that directive comes from above. And so these are kind of notable for us for future cycles as well. But yeah, so huge news for us to receive that positive record of decision, have the final environmental impact statement out as well. And, the timing was also very good for the company from a public relations standpoint, because it occurred the very same day that we were going in for the state hearing on the draft state permits. And that too, again, it's, unlike the Bureau of Land Management, Dogami and the other state permitting agencies, this is literally the first time that they've ever drafted permits for a mine before. So that draft package came out on December 8th, so just before the end of the year, to pretty much same kind of thing, little to no fanfare at all, which was a bit disappointing, but at that point we were getting used to it, that the market maybe didn't understand, or maybe the dynamic of being close to year end with all that year end positioning was kind of what won the day. But for us to be able to walk into this hearing knowing that we'd just gotten the record of decision from the feds, that we have that strong support, that strong showing from, a cooperating agency, which basically has dual role in the permitting of this project. It certainly gave a good boost to our team who was there on the ground and all of our supporters, the local legislators and so on. So yeah, it's been great. And, I'm really excited for kind of these next steps, which now we can start looking at, receiving a positive record of decision like this now puts us in a position where we can start looking at all kinds of different potentially financing options coming from different layers of government, because there's a lot of infrastructure build that's going on. There's going to be a lot of multiple use, public use access, whether it's the road that we have to expand, whether it's a power line that we have to upgrade and build. I mean, these are assets that can be in use, for many generations, and that will serve more than just the mine. So there's some interesting opportunities that we're going to start to look at there. And I don't want to get too far ahead of ourselves here, because, the other thing, as I alluded to, that we're now waiting on is the final permits from the state of Oregon. So the 29th was the public hearing for the state permits, and the public comment period was open until February 6th. So that just wrapped up. And, then the agencies have a period of time during which they will reconcile comments that came in, anything that needs to be clarified or adjusted. Obviously, there's also an obligation to make sure that that their permits converge and align with what's included in the FEIS and the record of decision. So that also helps with some guidance in terms of how, perhaps if there's inconsistencies, how those things can be reconciled. And so now we wait for them to finish that task of amalgamating all of these different permits and conditions, incorporating comments where required, and then releasing the final state permits. So I know you'll ask when that's going to happen. I'm not sure that I would stick to a hard timeline with them, other than I expect it to be in the second quarter. And my hope is that it's earlier in the second quarter. But given that this is really the test case for the permitting process in the state of Oregon, I think it's fair to give everybody a little leeway to make sure that, all the I's are dotted and T's are crossed, and that, basically everybody's comfortable with what they're going to be putting out publicly. So that's why I would say I feel good that it'll be in the second quarter, barring anything unforeseen at this juncture.
Okay, great, Rachel. Thanks for the update. One of the things I love about this story is your passion for it, because like a lot of CEOs we have on are just sort of going through the motions, it seems. And every time we interview you, you get more excited about what's happening. And it's really refreshing. let's take the last thing you just said first, which is, you're thinking second quarter, right? You can't be
Yeah.
held to a particular date, and we're not going to ask for that. But what's the worst case scenario in your opinion? Because now this January 29th news is really positive, right? And the stock, I was watching it when this news came out, because I trade after hours. You came out with this news January 29th after hours. Stock closed around a buck 73. It ran to 342 that night. I mean, that's a move, right? And that if you remember what happened January 30th, everyone, was this massive sell-off in our sector because silver was down over 30% that day. So it was some really interesting price action in your stock, and you're not in any control of that. I'm just trying to bring this to light that if that hadn't happened, I think you would have seen some serious follow through buying on the following day, January 30th, right? But
Right.
instead, we saw you halted close to the open around 230, 240 a share. And then it just crashed with the rest of the market back to a buck 75. Like nothing happened. It was ridiculous. So I'm very excited now that we've gotten this comment period kind of behind us. You just mentioned that it ended February 6th. And now we're in a different phase here for the stock, and it seems like you found some new love out there, because the stock, closed around 215-ish today, somewhere in there. It's definitely getting like some notoriety from new investors, it seems, in terms of the volume. Do you want to comment on any of that?
Yeah, I would say our timing was horrific for the release of the Rod news. But I mean, talk about a category of things that we can't control. That crash on the 30th. I know I was just shaking my head. It's like you can't get a break. But again, unlike, a move that's dictated by only an external factor, in this case, I actually felt good about the fact that, we have really a really strong catalyst in terms of de-risking and generating value from this company. And yes, the timing was unfortunate, outside of our control. But, I think it also gives confidence, it gives me confidence that we're going to see that recovery. I've been encouraged by how much stock trades now on a daily basis. And the reason I mention that is because, yeah, I think there were close to 8 million shares that traded in the after hours on that news. But if you look on the days that followed, there was certainly enough volume that could have absorbed, the remorseful buyers if they felt they needed to exit because somehow they got rattled by that sell-off. So and that gives me some comfort because if you'll recall, John, that we had that bizarro event during COVID in 2022 where we were a meme stock for, a day and a half or 2 days. And at that point, our volume, our daily volume wasn't very good. And we traded about 100 million shares in a very short period of time. And I honestly think it took about 18 months to unwind that. And it was during a very, let's call it news-free period of time. We had a dearth of news. There was nothing happening. The permitting was sort of at a phase where there was nothing imminent coming. And I remember being pretty concerned about, well, what are we going to do with all these new buyers of the stock who might be in there just for kind of a short-term trade, and all of a sudden this isn't going the way they want. So, so maybe I'm a little bit bruised from that experience, but encouraged, like I said, the contrast to today where we have a much higher average daily trading volume and value, which helps, more long-term investors build a stake and comfortably. And I think that's why we're seeing more of, I think that's why we're seeing more kind of buy the dip action too. Like today, I thought was notable because the sector was down across the board. We opened down like everybody else. We actually closed pretty close to flat. And, again, decent volume. So I feel like, and also when I look at, the register of shareholders and so on, I do see that there's more kind of institutional type buyers who are able to come in, and I attribute that too to the both the market cap, the liquidity, and obviously the news and the commodity price that are helping the stock.
Yeah, well, thanks for that rundown. I remember that period of time following COVID. It actually was two different times. If you pull up a 10-year
Yeah.
chart as an investor, you'll see it. It's pretty clear. It was a peak over a dollar and then a second peak over a dollar. And what Rachel is referring to is that certain stocks that had good listings, like her stock, were getting gamed by the Reddit Wall Street Bets crowd. And I mean, they were running the stock high. And And yes, it took some time to get some of that hot money out of the stock, and that didn't help because the environment wasn't 5,000 gold. It happened to First Majestic AG. It happened to a number of companies. If you look at a 10-year chart, you could see it. I remember seeing AG top out at 24 bucks. There was a seller of like 500,000 shares out there at 24. I'm like, okay, the game's over. Um, but let me ask one more question. We don't talk too much about your share structure, but I think it's outstanding versus your peers because you haven't been one of these CEOs to say, let's just keep raising money. We're seeing all these people raise 40, 50, 60 million at a clip now, and they're just killing us as shareholders because the share structure is just getting very large, right? So like on a nice move in the underlying metal, you don't see the same torque. So can you talk to the share structure a little bit, please?
Yeah, so right now, I mean, we just filed a quarter last week, so we update that with all of our subsequent events, so you can see what we've been up to. But so all in, we have fully diluted, we have less than 90 million shares still, and I agree. It's something that we've intentionally tried to keep our share count low, and part of it is because we want to make sure that when we are raising money, that we have visibility on where we're spending it. And that's been a delicate balance because there have been times where money's been very, very scarce, and that forced us to look at different types of funding options for the company in the past. And obviously that dynamic has shifted now. So it's still a balance, right? I mean, we still don't generate revenue, so we always have to be careful that we're not exposing our shareholders to the risk of us not being able to deliver on something because I have to say, oh, actually, let's pause on that permitting process so I can go out and raise some money. So we're always trying to be ahead of it enough that we're not going to be disruptive to the process, basically. So right now we have less than 90 million shares outstanding, and we have a very good roster of insider support, growing institutional shareholder base as well. We have some anchor shareholders in there like Seabridge, who continue to support us both as board representation and through capital, and as shareholders.
Last question is Sprott Inc. and Franklin Templeton and some big names are starting to show up more and more in stocks like yours. Are you getting calls like that, or does that even matter to the overall picture?
Does it matter? I guess I think the thing that matters for me is that it's easier for parties like that to consider an investment in Paramount or peer companies when we get to a certain size where we offer that entry liquidity that's helpful. So that's really the part I think that's the most important one. And I have seen signals about I won't name specific institutions, but I can see signs of institutions buying. I think it's been a long time since we were actually part of any of the indices in the U.S. I haven't run a screen lately on where that would be, but that would be coming up in the spring as well. I think when they make adjustments to the Russell Microcap was the one that we were in a few years ago, and then promptly got kicked out of probably within 6 months. And so this type of environment. I think though you'll probably see more adjustments. I've been noticing it just sort of analogously for some of the Canadian indices. I've been making those adjustments as well. So having more robust flows helps all of that. So you're not suffering these big swings with entry and exit.
Yeah, I mean, I'd imagine your market cap going up and seeing the enhanced liquidity in your stock those are two important things that these type of groups like the Russell, Feneck, et cetera, are going to be looking for. So that's great. Don, I'll pass it over to you.
Hey, Rachel, thanks for coming back on. So first of all, construction decision. Do you think you're going to, well, let's back up a little bit. Before you do the construction decision, you're going to update the feasibility in Q2. So after you finish that updated feasibility study, how much longer will it take you to have a construction decision?
So I think, the three big pieces for that is number one, we'd have to have all the permits in place, right? The reason I wanted to do this, there's a number of reasons I wanted to do this feasibility update, or it's an update to the feasibility, because we're not changing anything in the mine plan at this juncture. What we're going to see is adjustments to the costing, the pricing, and how that flows through, say, through cutoff grade, which hasn't seen any change since 2020. But we're not going to see kind of the wholesale detailed engineering at this juncture that would maybe accompany an updated mine plan, because really, providing that more current perspective to the market is important, because that last study that we did in 2022 was done at a $1,750 gold price, and so it's a really stale picture, even just, again, without adjusting anything in the underlying mine plan. It's a very stale perspective. So at least being able to show the market and our shareholders, more importantly, what this project can deliver at something closer to today's prices. And I might kick a question to you guys actually on this, because some of the feedback I've been hearing is that, we have seen the industry put out a number of studies kind of in the $3,200 to $3,500 range. And then the convention is to add in, an upside case. But as it was pointed out to me, and John, maybe it was even you, upside case these days is spot. And normally, in the past, if you go back to like our 1750 gold price, when we ran that feasibility study, it was done pretty close to spot, but the upside was up to 2100. And so I have yet to see a study come out with an upside above spot. And I think that's because everybody's cognizant of how quickly this move has happened, and nobody wants to be, the tall one sticking their neck out, I guess, kind of thing. But I would welcome your input on how that should be managed, because we do, certainly there'll be a range of prices that we'll be able to publish with the study, so we can show probably up to spot. And, whether or not there's a rationale to go beyond it, I think might be a tougher call. But again, that's what I would welcome some feedback from the two of you on.
I'm definitely going to give you that, but I'm going to wait for Sleeper for that.
Okay.
So your AISC and your CapEx were, currently are very, very low. So they're going to go up. They're going to go up substantially. So the last study, it was 136 million CapEx with an AISC of only $815. So how much do you think those are going to jump?
I'd be guessing along with everybody else. I'd say that there seem to be some things, and again, so we're going to be benchmarking against 2022. So if you think about it, our initial study had been in 2020. We updated it in 2022 so that we'd be SK 1300 compliant for the SCC. So at that point, there was actually a pretty big run up in inflation between 20 and 22. Between 22 and now 26, is it equal? Is it less? Is it more? I would say it depends. There are some things that I think see bigger increases, and there are other components I think will see lesser increases. So where that whole thing shakes out, it's really premature for me to even hazard to guess, and not get any of us in trouble.
Well, the one good thing is your market cap is large enough now. It'll be really easy for you to finance this.
Yeah.
Companies that have small market caps they're kind of behind the eight ball, but you're in really, really good shape. So you're going to get lots of offers. Your payback's going to be really fast because you're going to have really high margins. I mean, even if you jump to $1,100 AISC, you're going to be way, way below your peers. That's a really low level. So it looks like you're going to be able to finance it this year, but probably maybe construction in Q4, but more likely Q1 next year. And then how long is the build?
So the build right now is, we put in a 2-year build. There could be some things that could be accelerated to see that, maybe 18 months, but 2 years to be conservative is probably a good way to look at it. And to your point, yes, I agree. I think the project is a lot more financeable. Not just with this market cap, but it's really about the de-risking. I mean, having a permitted project is a much different story than having one where, permits are aspirational. And so I cannot underscore enough how critical that is from perspectives, all sorts of perspectives, whether it's cost of capital, availability of capital, opportunities, like I said earlier, to maybe look at certain levels of pockets of government funding could be an option as well. given the rural nature of the project and the infrastructure associated with it. So I think these are all important things for us to understand and make sure that we are structuring, or at least providing visibility on what a structure for a capital scenario for this looks like, an optimized one given our current circumstances.
Is your goal to get this into construction as soon as possible? And do you think you could do that by Q4?
I think it's assuming permits and tying up all the different regulatory bows are in place. I think it's possible. Yeah.
Right. Is that kind of your goal?
I think really the goal is to find what is going to be the optimal outcome for our shareholders in terms of how Grassy gets built. That I think is more important than speed of getting the project done. But I'm also only one part of this puzzle, and my job up to this point is to, like I said, continue to de-risk, continue to open up pathways for us to be moving the different pieces along, as far as.
Yeah, I actually like that approach. Basically, what you're saying is that you're not going to rush financing. If you don't get a good deal, you'll be patient. I like that approach, because a lot of companies, they rush into financing and they do really poor deals. But I don't think that's going to be the case with you. I think you're going to have a lot of choices, because this is going to be a really fast payback, in my opinion. I have your free cash flow at $200 million, so that means your payback's less than 1 year. That's it. It's $6,500 gold. You miss badly. I mean, if you have $6,500 gold when this goes into production, which I think it will, if your ASIC is at $1,500, so if you miss by 50%, you're still $200 million free cash flow. So that's a 1 year payback. Okay, so now let's talk about the juicy part of your company. The reason I own it, because of Sleeper. So Sleeper is a past producing property, which is, it was basically in production for 10 years. So it's got a lot of infrastructure already built into it. It's got past environmental baseline. So it's kind of ahead of the curve a little bit. 3 million ounce deposit, which I think is going to grow to 4 million ounces. I actually value Sleeper at $5 billion. Yeah, you said, okay, Don, what do you want to use? Well, when Sleeper gets into production, we're talking kind of way down the road, but I can use $7,000 gold, and if we use, we use $3,500, so the margins would be $3,000 to $3,500. I think when you drill this thing, it's going to get to 4 million ounces, so that means the production is going to be at least 150,000. So that's $500 million in free cash flow. So, it's in Nevada with those kind of margins. You're looking at a multiple of at least 12. That's $6 billion. So it's worth $6 billion. So I'm hoping that you guys go in there. You have this $200 million in free cash flow. What the hell are you going to do with it, right? It's a lot of free cash flow. It's like, okay, let's drill a little bit. Well, how much can we drill? We can't drill all of it. We can't spend $200 million drilling, but we can drill the hell out of it. And so you will drill the hell out of it. And then you're going to go, okay, man, we sure found a lot more gold, But the one thing is, I think you're going to find a starter pit, a high grade starter pit. And what I hope you guys do is you're like, if this is an open pit mine, it's not that difficult to build and operate. I think we can do this. Why don't we start small? Why don't we do 75,000 ounces a year? Start small, and then we'll, go from there. Because if you tell the market that that's what you're going to do, and I hope you bring in a strategic shareholder to basically, because people are going to want to steal Sleeper from you. Because like I said, it's worth $5 billion. That's a lot of money. Your market cap is 200 million and Sleeper's worth 5 billion. So, people are going to try to steal this from you. So I hope you bring in a strategic for that. That would be fantastic, and just lock it down. I've been every time we talk to you, I always keep telling you, Sleeper's the crown jewel. Don't give away the crown jewel. And that's the thing that's absolutely insane right now is your market cap is $200 million. Grassy Mountain's worth $1 billion. That's after dilution. If you had no dilution, it would be worth $2 billion. So it's worth 1 to 1.5 billion. That's at current gold prices. The gold prices are going to go higher. So basically, you're basically about a 4-bagger from here, just if prices just stay the same. And I don't think they're going to stay the same. That's just Grassy Mountain as a 50,000 ounce producer for 10, 12 years. But so, I'm hoping that you guys are very patient. You are a very patient person. I've known you for a while now. You're very patient. So it's like, okay, we've held on to grass. We've held on to sleeper. We've held on to it. We're not just going to give this thing away. We're going to drill some holes, and you're going to drill a lot of holes. So I really think this is a 4 million plus property in Nevada. And those are worth a lot of money. That's a tier 1 project. The majors are going to be, the phones are going to be ringing. Barrett called today? What's going on here? So I want you to build it. So I'm thinking that you're going to start drilling sleeper in 27, right? Q1, Q2 next year, you're going to drill sleeper. Is that right?
I think it's certainly a strong possibility. I think what our job number one is because we have spent so much, basically all of our capital and focus on Grassy and the permitting, which I can tell you has been no small feat. And I've said historically that we wanted to get Grassy kind of over the permitting hump, where we then have visibility to allocate time and capital to reviewing sleeper. At least let's start with a review. Let's understand, are there different ways to crack this nut? We already have 3 million low grade ounces here. Well, low grade ounces when it's $1,200 gold and those same grade ounces at $5,000 gold are two very different things. So is there a way for us to extract value from this property without a lot of spending? And what does that look like? How can we sequence it? And so these are some of the things that we're looking at now internally. First, we're doing internal reviews at the management and board level and with our consultants to formulate a plan for that. And, I'm hoping that we'll have something, that we can share with the market about what our intentions are. Again, I would say in the next 6 months, we should be able to give you better visibility on that.
Yeah, where I get excited is when you finally do release a PEA on sleeper and you show the MPV. That's going to basically, people are going, oh my God, kind of thing, because the MPV is going to be a monster versus. I think it will be a monster when you guys eventually get to it. And it's not going to take long. It really won't. I mean, you basically drill it and you do a PEA. I mean, it's pretty simple.
Well, and the thing that's interesting, Don, too, is that, like I said, we already have a starter pack of 3 million low-grade ounces. And now not all ounces are created equal. Some are easier to mine and process than others. But we also have this substantial land position. I mean, it's 40,000 acres, largely contiguous, hasn't really gotten any love in terms of drilling for about 20 years. And so there's all kinds of different things that we could be looking at. And if there is a way that we could generate earlier cash flow from a smaller project and then look at being able to self-fund different aspects of future optionality, I think that might even be a more exciting route than going bigger is better.
I agree. That makes me really excited. That's great.
Yeah, I think that's a great strategy, Rachel, because, when we had dinner with Don 3 years ago, we were talking about this very thing. And we were saying to you, don't sell it cheaply. And you didn't, like so many CEOs would have. Now you'd be like, oh my God, I just gave that away. I mean, look, there's so many projects like that. Guanajuato just picked up, Bolañitos from Endeavor. They would never sell that project now that silver's run up for the price they did, right? Like you can go through a list of these things. And so it's really great that you've held that on, because guess what? If your share price declines, you could use that against the shorts to be like, all right, we're going to announce a drill program. These guys would cover so quickly, because it's the same thing with US gold. I talk to them about this concept all the time. They've got the Wyoming project. They're moving that forward like you're moving forward Oregon, right? And in the background, they've got this monster project in Nevada that no one even remembers, right? And it's like, if they start drilling that thing and they hit, it's like game over for that share. I mean, so there's a lot of blue sky in your stock.
I just have one final comment, which this is going to kind of shock people, but this company should be getting $100 per ounce for Sleeper. So they have 3 million ounces. So Sleeper should be worth $300 million. They're getting zero for it. That's kind of a mind blower. But and that's today's value. It should go to 150, 200, even $300 an ounce, which is $900 million once it becomes a little more advanced. That's what Sleeper brings to the table. Just the gold in the ground, period. So like right now, they're getting zero for it, which is kind of ridiculous at these price levels.
Yeah, it's a great point.
It is a fair point. And you know, Don, historically, I rationalize that by saying, well, we're not spending money on Sleeper. We're not doing the things that you're mentioning. And, you know, but we were constrained. We were capital constrained. And, you know, to your earlier point of good we didn't sell it, sometimes we get lucky in the decisions we make and the decisions we don't make. I can tell you there were some very difficult years there, you know, and I was very grateful that we secured the Sprott Streaming as a partner for us,
right,
getting us to this point, because there weren't a lot of people putting their hand up to give us money back then.
It's very true. Yeah. I mean, Eric Sprott, Sprott Inc., Rob McEwen, Justra now, the last couple of years. I mean, there's these people have really helped us in the dark days and helped in your case to create that bridge, right? Of like, oh, we could easily sell Sleeper. 3 million ounces a few years ago was very attractive too, but you would have not had the same valuation potentially, because now it's like you can hold that over people's heads that don't like the story, right? And be like, hey, I could just announce a drill program tomorrow if I feel like it. You won't, but you could. And that's part of the investing, right? Is like, hey, look at me. I've got two assets, not one in the US. And now I've got the fast tracking at my primary project. Who's to say I couldn't get fast tracking at Sleeper if I really wanted to next year, right? It's like, I mean, you just don't know. We're in a different paradigm now. Like Trump and the US is going for it, and gold is part of that narrative.
Yeah, I totally agree. And we also benefited from getting some tremendous insight by working on our EIS for Grassy with the BLM the way we did. We got really good insight into kind of how different parts of that process can be streamlined. And in this new environment, I think we have a really good perspective. We have actionable perspective on how that works. And I would tend to agree. You know, I mean, we've been doing ongoing reclamation work at Sleeper from the time it was put on care and maintenance. And so there's a lot of ongoing monitoring that goes on already. So I think it wouldn't be a difficult transition to start collecting baseline data for an eventual study there as well.
Excellent.
Exciting. Very exciting.
Well, thanks, Rachel. We really appreciate you coming on.
Absolutely, my pleasure. Great to see you both, and hopefully we'll be crossing paths in the not too distant future in one jurisdiction or another.
Hope so.
Absolutely. Well, I'll definitely see you at my conference in Washington, D.C. in May. We're excited that Paramount is supporting us there, and if not sooner. So, Rachel, continued success, and we'll be following the news here in the coming months.
Terrific, and thank you for your support.
Of course. This has been Rachel Goldman with Paramount Gold, ticker PZG. So, Don, why don't you give us a brief summary?
I've never owned Paramount Gold Nevada for Grassy Mountain. Never. I've always owned it for Sleeper. Grassy Mountain, I mean, yeah, I'm all about alpha. I'm all about chasing the alpha. And I mentioned that I think Sleeper's worth $5 billion. And that's the crown jewel of this company. Grassy Mountain just gets them there. That's just a stepping stone. I always say that you make your money on the second mine, not the first mine. So they did a great job. They basically said, the way to do this, we'll do Grassy Mountain first, we'll do Sleeper second. And now they're set up to do it. I mean, they're going to have $100 to $200 million in free cash flow once Grassy Mountain gets turned on. That's a lot of money. That's a lot of cash to basically to push into Sleeper. They're literally going to be able to build Sleeper organically, which is amazing. I mean, 3 years of free cash flow from Grassy Mountain, will basically be able to fund Sleeper. So I'm very excited about it. So I've always liked this company, but now it's just I can't wait till they start drilling holes in Sleeper. It's going to be stunning because, like I said, a 4 million ounce property and an undeveloped 4 million ounce property in Nevada is rare. In the United States is rare, and they're going to be one of the few, and they're going to be in a really good situation.
Yeah, so I mean, Nevada is the #1 jurisdiction globally as of last year, and to have 3 million ounces there is no small project. She mentioned it's 40,000 acres. I mean, this is a monster-sized piece of land, and she also mentioned it hasn't really been drilled much in the last 20 years. So you don't really know what's there. That's called blue sky. That's called blue sky, right?
I actually think that my valuation of $5 billion is conservative because I think that they could easily find a lot more gold. So I'm valuing them as a 150,000 ounce producer. It could easily be higher. So this Sleeper's worth a lot of money, and they've held on to it all these years, which has been fantastic. I always knew eventually that mine will get built, will be worth a lot of money. It's just a matter of when.
Yeah. And I'll just point out lastly, the share structure for me has always been one of the reasons I own this stock. Under 90 million fully diluted as of this recording is crazy for as many years as Paramount has been around and what they've had to achieve to get to here. When you look at the peer group, there are a lot of stocks we could name with 200 to 300 million shares out with less supportive shareholder bases. And so, yeah, that's why you see spikes in this stock sometimes. In my opinion, you got a lot of buyers on one side of the ledger and not many sellers.
Right.
That you saw it today. The stock hit 201, so it tested a big round number like $2 and just bounced.
Yeah. Sorry to interrupt. Rachel might still be listening. The one thing that they can do, because like a lot of times these banks, they want them to dilute their shares first before they do the loan. So we see a lot of these deals where they agree to do a financing, they do the financing, and then they get the loan, right?
Right.
I'm hoping that if they have leverage, if they can, the longer that they wait to dilute their shares, the higher their share price is going to be. Their share price is at $2, $2.20 today. It was at 35 cents when we did this last time. $2. This stock could be trading at $4 next year when they need to do the financing. Well, maybe not $4, but if they wait, the longer that they wait, if they can basically get a loan, I don't know, maybe some type of a financing where they don't have to dilute it all up front, this share price could really rip once the market recognizes, for instance, like Sleeper, the gold in the ground at Sleeper right now is getting zero value. So as this project gets more and more advanced, at that point, that value in the ground is going to start to get valued. So their share price is going to start to rip. So we're at $6,000 gold by June. This thing could really, really start to take off as people start to see what they really have. So the longer they wait to dilute, the better. So I'm crossing my fingers. They don't, the bankers, because I call them, the banksters, they're going to dilute those shares and then we'll give you the loan,
Yeah, that's very true. I mean, a lot of these banks don't have good intentions, I don't think, in our sector. I mean, just to mention one stock that we recently interviewed, Western Exploration. They're in the same state that we're talking about, everyone. It's called Nevada. They have 1.5 million ounces. Okay, so half of the size of Sleeper, but it's run by a series of executives from Meridian, Yamana. These guys have a ton of experience. They're just doing it at their own pace, right? And the stock was getting punished before our interview, and they had very little hope of raising the kind of money they just raised. And then we interviewed them, and then they said they had 18 banker calls, 18 out of our interview, right? Like all of a sudden, everyone's like, "Oh, look at this stock. Wait, what?" Like it was there all along. You guys just didn't want to step up and help a company. You always want to get in and make the easy money, right? Like it's frustrating. It's really
Western's getting 18 bankers to call them, Rachel's in great shape.
For sure, because Western's got half of the ounces of one of her projects, right? So like this is the environment that we're in. There's a lot of stocks like Western Exploration, by the way, that's WEXPF in the States, WEX in Canada. They weren't getting the love like that they deserved in a hot gold market, right? It's not because of the project's merits. It's because they weren't spending a lot of money on marketing. They were doing what they thought was the right thing, right? And now they see a different scenario. I talked to them after our interview, and they are going to be doing a lot of marketing. They're attending conferences. They're going to be doing, some social work. Like they see the opportunity better since our interview, and that's one of the things that helps companies too, Don. It's not just the investors that we're talking to through this. It's the companies themselves to see, wow, like look at the opportunity here. I didn't even realize there was that much interest sometimes. And they did the right thing. They raised 8 or 9 million bucks. They didn't raise 50. They didn't raise 40, right? They said, hey, we have a really tight share structure with 52 million shares. We don't want to mess this up. So let's just take what we need. And that's kind of been Paramount's approach as well. Like they don't go out there and take these big, amounts of cash because they understand what Rachel said, which is one day we're going to need to fund this capex.
Right. Yeah.
So let's leave it there. And Don, thanks a lot for the insights. It's always great to have Rachel Goldman on from PZG, and we appreciate everyone listening. We'll hope to take a look at Paramount's website and learn more. Thank you.